Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day. Today is May 17th. Today we are going to cover Kroger. This is actually one that I don't feel is a buy. Some of the analysts think it's a buy, but I still think it's overpriced and has some to pull back. That's one of the reasons I wanted to cover it. Just because the stock pulls back 3, 4, 5, 20% even doesn't necessarily mean it's fairly valued. So let's take a look at this and I think you'll understand what I'm saying. So the history of Kroger, our store began in 1883 when Barney Kroger invested his life savings of $372 to open a single grocery store at 66 Pearl Street in downtown Cincinnati. He had a simple motto: be particular, never sell anything you would not want yourself. Nearly 140 years later, the Kroger Company is still particular about how we serve customers and community, how we innovate, and how we hire. As the nation's largest grocer with nearly 2,800 stores in 35 states, operating under 28 different names, we meet our customers' changes needs by making fresh food accessible to all. Our current practices are rooted in Barney Kroger's early efforts to serve communities through food freshness, low prices, and innovation, fundamentals that remain at the heart of our Kroger mission today. This is the story of all people in our history who helped change the way we shop, people who continue to make a difference in the lives of our customers every day. If you wanted to know more information about the Kroger Company, you can go to www.thekrogerco.com. Here, this is their homepage. Again, on the day, it's down 3.7%, so almost 4% on the day, guys, down to $51.23 at the close of business on May the 17th. This information is brought to you by Yahoo Finance, not affiliated with Yahoo Finance, just where I pulled this information from. And again, that seems like a significant drop. Maybe it's one to take a look at. 51.23, 52-week range as low as $35.91, as high as $62.78. So definitely off the highs, not quite down to the lows. I was actually picking this up around $33, $34 last year. So in my mind, that's more towards fair value for this particular stock. Market cap of 37.068 billion, a beta of 0.47, so it is less volatile than the overall market. Has a PE ratio of 23.61. This speaks to the overvaluation in my mind. This is a grocery store, so again, you shouldn't be paying this. This is something you'd pay for a tech stock like Apple or something like that. Really higher PEs with a lot more growth than what Kroger has. This has, again, been around since the 1800s, so they've been around for a very long time, which are the type of companies I like to look at, but I do not like to overpay regardless of how long they've been around or how good of a company it is. Forward dividend of 84 cents on the year, pays out quarterly, so divide that by 4, it will give you the amount to pay out, as a 1.58% yield, so not a very high yield. That's actually right in line with the overall market. Ex-dividend date of May 12th, so just past the ex-dividend date, and a one-year estimated target, at least according to Yahoo Finance, of $55.33. So they feel like in the next year it could increase in share price by about $4 per share, which it possibly could, especially with higher inflation. This is the type of company that can pass on inflation costs to customers. You've got to eat, so you're going to go to the grocery store and buy groceries, and they can pass on the higher inflation costs to you, which is one way that these stocks sometimes can get overvalued. If you're in higher inflation times, consumer staples and companies that sell consumer staples, which are products that you need, bread, milk, cereal, baby formula, stuff like that. So you're going to the grocery store to get those things. These companies can get overpriced in times like these with higher inflation. Now, according to 36 stock analysts who have taken a look at this, it is right on the edge of a buy and a hold. I would actually call this, really more in the hold range. They are saying it's a buy, but their low estimate, they show $38.38. That would be a 25% decline from where it currently sits, and I agree with that. If you could get it back in the 30s, I would definitely say that would be closer to fair value for this company. So maybe watch it to continue to pull back. Their average is close to what Yahoo Finance had at about $56.02, which would be a 9% upside in stock appreciation from where it currently sits. And then if it was to happen to hit their high, $78.75, that would be 53% stock appreciation from where it currently sits. And I could see that as well. If inflation continues in the 7-8%, I think it's currently around 8%. In my mind, it's even higher than that in some places because the CPI, like I like to call it, CPI index, doesn't account for some things, rent, gas prices, that sort of thing. So if if inflation continued to run hot for the remainder of the year, even into next year, I could see it getting into the 78, 75 range. Because again, they can continue to pass on that higher inflation cost to you and I as a consumer. So that would artificially prop up a stock like the Kroger company and other consumer staples right now, which some are overpriced as well. So just because a company, I wanted to cover this because I really like Kroger. This is a company, again, it's in my portfolio, so I'm long Kroger. I have not been adding to it anytime recently because I believe it's overvalued. I still believe it continues to be overvalued, even with a 3.7% pullback. Again, I'd be looking for more in the 30s, maybe in the low $40 range, maybe start dabbing it a little bit. But if it got back into the 30s, I would be a buyer all day of Kroger. Again, a company that I really like. It's a grocery store that I actually use here in Michigan. And it also, using their points gets me cheaper gas. So definitely one that I use on a weekly basis at a minimum where I buy my groceries. But again, one that I feel is still vastly overvalued, partly because we have higher inflation and they are passing on that cost. So just because you see some of these pullbacks, 3%, 7%, 5%, 10%, even 20% sometimes, again, this one would need to pull back, in my opinion, about 25% for it to be fairly valued again. Just because it pulls back a little does not necessarily mean it's fair valued. And just because a company dips, I know people will say buy the dip, but don't buy every dip. Just because a company's dipping a little bit or pulled back a little doesn't mean it's in fair value. Have an actual value for the stocks that you're looking at and don't overpay. If your value is at $40, great. If it's at 35, don't pay 38. If it's at 38, wait for it to get there. There are thousands of stocks for you to buy, thousands. Don't fall in love with a particular stock or a particular company because you think it's great and pay whatever the price is. Find the value out there in the market. That's what we should all be doing. And that way you can get higher returns, higher yield on your cost and be a better investor. That's what it's about, guys. I'm getting a little long-winded. With that said, I appreciate you stopping by as always. And if you haven't done so already, don't forget to show me some love. Hit the thumbs up, ring the notification bell, subscribe to the channel, drop a comment down below. Let me know what you think about Kroger. Let me know what you guys are doing with your portfolios. What have you been adding? What are you watching? I do personally read and respond to the comments. I'm always interested to read your opinions, questions, or suggestions for future videos. If you have a suggestion for a future video or a stock you want me to cover, drop that down below as well. Hope you enjoyed the video. This is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, we'll see you next time, guys. Thanks for stopping by. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you're not comfortable losing. Always do your own research and invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.